Hey everyone, welcome to this special edition, another special edition of Pre-Market Prep at the close. Spencer Israel, Joel Elconin, joined by Anne-Marie Baiynd, special guest today. She is the CEO of the tradingbook.com, joining us to walk us through these final 20 minutes or so of the day. Joel and Anne-Marie, how are you guys doing today?
Hi, doing well,
Great.
Spencer. What one hell of a day. Let me recap things real quick, and
Go
then
for it.
Anne-Marie is going to explain the economics of the world to us, which we really appreciate. Things look bad this morning. We were heading towards that low from yesterday that we talked about, 23.50. And I don't know if it was Anne-Marie or Fari or the Fed, but they stepped up at 23.52, and boom, we turned around and had one hell of a rally, almost a 200-point rally. We were talking about that inside day, and the Globex high is way up there, so it looks pretty good that we got an inside day. I don't think we're going to get to 26.50 today. And then we came back down mid-range and just have a lot of herky-jerky motion. But going into the final 19 minutes of trading here, the S&Ps are attempting to close over 2,500. Bringing in Anne-Marie here. Anne-Marie, very, very complicated situation here with what the Fed's doing, different opinions. I talked to you about, the government preparing people, sending them checks, preparing for depression, who's going to help the airlines. But you had a much, much different take on things. And we would love to hear your take. Anne-Marie Baiynd. How you doing, Anne-Marie?
I'm doing really well. Thanks so much for having me on. I love to talk about the markets. You know, this the overall market is a very complicated element because there's so many of us doing so many different things in so many different ways, right? People make money doing just one small element of the market, and that's multiplied by 10,000. But the biggest things in the world are those credit markets, right? And the credit markets are much, much bigger than our equity markets. And it's because credit really runs the show. Credit keeps us afloat. And when the Fed came in on Sunday night and they said, hey, listen, we're going to fire the bazooka here again, and we're going to give you 100 basis points for the Fed funds rate to go from between 0 to 25, everybody thought, okay, that's going to help people lend. So I don't want to get super complicated because really I just started understanding these mechanics myself over the last couple of years, but they have been critical to me navigating the market. And so let's say here we have the Fed and they change the rate. So what that means is when they come into this repurchasing window, we've heard about it if we've watched the news, it's called a repo window or the repo market. It's the repurchasing market. People, big banks, only certain kinds of folks can come to that place, and they can get credit from the government, and they're supposed to lend it to secondary parties. And those secondary parties might be Boeing, might be Bank of America, might be whomever, JP Morgan, whatever. And so when these big companies here are sitting in the front edge, and those are those big banks, and they have someone like Boeing say, hey, listen, I need to tap down on my credit, and I know the Fed has this money available at 0 to 25. Well, those big banks up there at the top, Goldman, JP Morgan, Bank of America, whatever, they say, oh, sure, we'll loan it to you, but we're going to add 1.25% to the Fed funds rate. And so really the Fed has no control over what the rate is in the window. And the reason for that is the banks are now looking at companies like Boeing, like Comcast, like whomever is coming, saying, I don't know how you're going to meet the requirements to pay me back. And so when that happened, right there in the Sunday night area where everybody starts coming together, figuring out what and when they can borrow, Nobody was there. Credit markets froze up, market tanked. We had another Black Monday. And so the Fed has to sit back and go, well, obviously the banks are seeing this as an existential risk to themselves, not lending any money. So we're going to have to lend money. And so that's what happened today. I mean, the market turned around like a shot. It went from straight down to leveling out to go straight up today, right when they came out this morning and they said, hey, we are opening up commercial paper funding. If you follow me on Twitter, I put something out that said, what is the commercial funding paper operation? And so it's on there. You can find it also on the New York Fed's website. It's called the Commercial Paper Funding Facility, and it tells you exactly how this money's moved out. Now, here's the thing. At the end of the day, we're spending a ton of money telling people we're going to bail them out, telling people we're going to send checks in the mail. They need the help, but there's going to be a big bill at the end of the day, and that big bill may or may not get paid. And this
what if it doesn't get paid?
Well, there you have it. At some juncture, it's
that's the other shoe.
Yeah, right. Exactly. You know, the modern monetary theory says that literally a country can print money forever. The problem is, if you keep printing money, at some point, who's taking that money from you is going to go, you know, this is like monopoly money, so it's not really real. And what it's going to do is cause another dramatic. So there's some other pop right here, but for now, I'm willing to say, for the first time since we started dropping off the face of the earth, and at the end of February, the beginning of March, we found ourselves a floor. So I'm going to put my foot out and say the bottom is in until it isn't. And so, right? And so we're going to watch it. When it pulls back, it should hold. And then we're going to have these steep bear rallies. And they're going to spike way up. It's going to get to all the trapped buyers. They're going to get out. And then it's going to come in and do it over and over again until, you know, whatever. But the commercial paper funding positioning was really what brought us out of that first financial crisis.
So here's what Steve Mnuchin said today. He said the Fed will buy commercial paper for 1 year. Right now it's for 1 year, unless they decide to extend the program. And then when asked, how much, what is the Fed's capacity to buy, he basically said, well, what is the size of the market? He didn't really give an upward limit.
And do absolutely, because they're going to print until there's no need.
Right, exactly. So right now we don't really have an upper limit on this commercial paper process, and we have a 1 year time frame for now. And to Anne-Marie, what you just said, this is one of the things that brought us out of the crisis in 2008. So
exactly.
The
difference is, of course, our debt is many, many trillions more.
Sure.
And we're, we are, what's that? They're calling us the Japanification of America. We are going to have so much debt that it's literally going to be 100% of our GDP, which is, at some point, things start.
Are we kicking the can down the road?
Oh, we absolutely are.
Sure.
So we're kicking the can down the road.
Yes, and this is because it's my thought that if you are in a capitalist system, that some things are going to fail, and I'm very sorry about that. But if you play, you will have to pay. Now that sounds really heartless, but I'm in an extremely competitive business, and some people win and some people lose, and that's just the way it is. And what the government and the central banks have really started doing over these years is saying, no, nobody can fail. No business left behind, right? So they're just going to continue to try to keep things afloat when really some things need to fail.
Exactly.
We've just shoved so much leverage into them that if they fail, it's going to cause a massive systemic shock. And who knows what'll happen then? Anarchy? I don't know. You know,
Right.
it's
We haven't
possible.
gotten there yet.
Absolutely.
I saw some comments that some people had complained. Well, it's not a particularly generous rate that the Fed is providing protection for, but beggars really can't be choosers in this kind of a market. So I want to bring it back here to the equity markets, because that's sort of
Yes.
our wheelhouse right here.
Absolutely.
The Fed came out with this announcement earlier today. We are up for the
Mhm.
day. We're up around 4% on the S&P futures, with about 10 minutes left in the regular session. I don't know what SPY is up right now, but I'm sure it's around the same. And we're seeing SPY is up a little over 5% today.
Yep.
We're seeing the rally. What is leading the rally? Utilities. Utilities are
Yes.
leading the rally today. The XLU, last I checked, it was up 11%. Now it's up 13% today. Big rally for the XLU. The entire utilities sector is leading us higher here. So, Anne-Marie, what do you think of this rally today?
Well, you know, spiking utilities doesn't scream risk on.
That's what I was thinking.
So, yes. Now, I think most of the big players, and I really don't like saying that so much, I think it appears that most of the players are understanding the game. They're just trying to play it, and it's musical chairs, so there's always a chair slipping away. And so here, this is a perfect chart. Absolutely love it. It's the daily. Take a look at where it is. We're going to stall out right there. And we're going to stall out there because somewhere around that 60 mark, people started saying, hey, this is it. This is our buy zone. I've got all kinds of support sitting right around this area. It looks like a lot of congestion there. And we come in the next day and the wheels are off the bus and it's absolutely collapsing. And so people with steady hands are going to say, listen, I know this is a nasty fade, but it's a very fast fade. And from fast moves come failed moves. So I'm going to see a bounce. And so that's what they wait for. They wait for that bounce event, and then they're going to trip, just like, listen, exactly like me, totally underwater in Amazon, just hanging on because I had the long 1750 calls and it fell right out of bed. And I just kept hanging on. I said, you know what? From fast moves come failed moves. This thing is going to bounce and it's going to hold. And guess what? It got up to 1806 and I said, good night, Irene. I was out of there. So that is really what we are looking at. Now, Amazon is extremely well positioned. They're the only ones saying, hey, listen, we're going to hire 100,000 people. They are engineered to work in this kind of no contact space. And so if you are looking for something that's going to give you strength in a bottoming and you are willing to do something like go deep in the money with a call spread like the 1590s, and you do a spread that's maybe $10 wide, see if you can get yourself a 30% return month over month. I think that's a great play because it's got stability. In the end, we could come in tomorrow and have another 200-point drop because algorithms are really moving the market now. The next big thing is that they just outlawed short selling in all the European markets. So the only people buying off of these very deep lows are the ones buying to cover. Nobody else has any guts.
Yeah, that's it. Anne-Marie, I mean, you paint a very, very good scenario here. As far as, what our government's doing, what needs to be done. And I hope you're right. I hope you're right. Just my main concern is that, yes, this is a financial issue, it was having impact our economy, but this is a health issue. And this isn't something that we've ever really dealt with before.
That's correct.
So, you're throwing money at these companies. You don't know, what the impact's going to be. And I think to me, why the rack, you could talk about the credit markets and everything. I think that part of today's rally was all these companies coming up with potential cures and vaccines and things like that.
Oh,
I
that's
think,
wonderful.
yeah. So I think that is the optimism. J&J is up 6% here. But I mean, if you listen to the chief innovative officer, whatever, J&J, he said this is not going to be ready until early January. So
Okay, so
I'm just
this
still
is,
too nervous. Until I know
yeah.
one of two things. Either to I know what the impact's going to be until more people are tested, right? Or
Mhm.
until we calm down. Anne-Marie, I've
Yes.
said this a lot of times on the show. We gotta calm down.
Calm down. Oh my
200-point
gosh.
ranges and average
Yes,
trading range. So,
absolutely.
yeah, one of those two things, for me to happen to be more comfortable
Yeah,
into
and
the market.
this is no place to be comfortable and be invested. I think it is uninvestable with the VIX as high as it is. You don't really know what's going to happen. Also, I read a very good paper by a Yale epidemiologist, and
Hmm.
he brought up the 1957 flu pandemic. And I know Dennis doesn't like calling it a flu, but it is the same viral component
Kind of
as
flu. Yeah.
influenza,
Yep.
right? Now, the difference is we can carry it like typhoid Mary and never get it and give it to tons of people that get it. So that is a pretty big difference. However, this 1957 pandemic is very interesting because he talks about what happened. Very, very, very strong strain. It infected a lot of people. As the summer rose, everybody stopped getting sick. At September, they started getting sick again because the virus was still around. And so this happens when we have real pandemics. A real pandemic is like an earthquake. It has the primary shock and then these small aftershocks. So when they say, hey, listen, these vaccines aren't going to be ready until X, they're probably still going to be needed on X. And you are absolutely right. I am by no means saying go out and start buying. I am not. What I am saying is for the market to turn, something special, a series of events have to occur. One, the government's got to throw money at everything and say, listen, we got it. We got it. We're under control. And that's what helps people go, okay, they got it. I really believe in them. They're going to take care of everything. Right? You can't, I mean, that's exactly what they're thinking. We've got to think that, right? And so that causes the calm event. And then people start to settle out. And then you start seeing them nibble on the bottom. And we don't make any more lows. And that's going to be the thing. Start watching that level. If that low doesn't hold, all bets are off. Everything I
Yep.
just said went into the trash can.
Yep.
It,
Yep.
the one
23.
the one thing I'll add on that before Joel kind of walks us into the close here, I'll just pull up a year-to-date chart of the S&P 500. So the S&P 500 made an all-time high 19 days ago. And in those 19 days since, there have been 7 up days, right? This is not the first time we've had an up day in this kind of market. 7 up days out of the last 19, okay? We can go up intermittently.
Mhm.
It's happened.
Absolutely.
It doesn't mean the roller coaster is over.
That's exactly right.
Doesn't mean we're done going down. But so I wouldn't put too much stock in any one up day. To Anne-Marie's point, I was just looking at what the market did in 08, 09. Wait for that, maybe that sideways action.
Oh, yeah.
That
Yep.
sideways
That's what I
action,
think
right?
we're going to have for 2 quarters.
Yeah,
Yep.
yeah. Okay, Joel, walk us through the close here. What's about to
We're
happen?
ripping here on the close, Spencer. We're dipping, but right now we just hit 25.21 and a quarter. The high for the session stands at 25.42.75. So we are within 20 handles of that after a wild day, 200-point range, at least here within the final minute. Another 10, 12-point pop in a 25-30 handle. We are approaching the high of the day here. We on that little pop there, we got the 30, 36.75, and now we're back at 25.20. So extremely volatile session here in the close, but overall, a very, very strong close, a very, very good day for the market. We're starting to sell off. We just lost 31 handles. What you had was a lot of big MOC orders, market on buy,
Yes.
market on close, market on buys, and the market makers popped them up and hit them, and they're going to bring it in tonight and tomorrow. Actually, this is amazing movement.
Yes.
25, 35,
Terrifying
75,
movement.
and now
Yeah.
back down to 2,500. So got a good point of reference up there. We got my inside day that I wanted. It was close on the downside by 2 points. The upside, we still have a ways to go.
Oh,
The
absolutely.
interday high we got to. So if you want a good level, if you're trading overnight, today's high was 42.75. Our intraday high, that's from 9:30 to 4, was at 25.48.50. So there's your level. We get above 25, let's just call it 25.50. Then, boy,
Yeah.
we're off to the
2,700
races.
is the next stop.
I think so. And now that we're far enough off the low, right? We're gonna now when you pull back, people are like, "Oh, I might have missed the bottom here. I gotta buy." So you're gonna
Yes.
get a little bit more of a push and pull.
Exactly.
Yeah. So I'll wait to see what that 4:15 close is. And we'll take it from there. We'll observe the overnight action. Anne-Marie, thank you so much. I can honestly tell you that I took economics pass fail in college, and I always and I barely passed it. So you did a great job of
Thanks.
explaining
Yeah.
that. I hope your scenario turns out. So Spencer, I'll let you wrap it up.
Yeah, we closed for the day up just under 6%. So like Joel said, a good day for the
Yeah.
market. It's always something to be celebrated. We'll see what happens overnight, and we'll see what we get tomorrow morning. So on that note, thanks to everyone who joined us. Thanks to Anne-Marie again.
Thank
Anne-Marie
you for
Baiynd.
having me.
You can find her at Twitter, on Twitter at Anne-Marie Trades, correct? And
Correct.
thetradingbook.com is her site. Everyone have a great rest of your day. Markets up, and we'll talk to you guys, I guess,
See
on
you
Wednesday.
soon. Yeah.
Yeah, have a good one.